Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's June 24th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. What a world we live in, where social media dominates our lives. You can influence so many people now using the camera on your phone. Just look up Facebook, Twitter, Instagram. That provides tons of ammo, especially for the media, to further their agendas, which we all know. I don't care who you listen to, but every major media company has an agenda. Right? They don't just report the news. They have their spin on it, which goes towards their audience. But the anger this is creating right now in America is off the charts. It's incredible. I mean, I'm sure you're going to agree with me at this point. And yes, this is a rant. And yes, I'm going to curse a little bit. So if you want to fast forward to this part, feel free. But I ask you not to. I'm going to get deep into this right now. You know as well as I do, there's lots of people are nice. I'm sure you'll agree. Most people out there are nice. They're cool. I don't see racism where I am. Does it exist? Yes, it exists. But people normally treat people good. If you remove that social media component. But seriously, most of us are nice out there, but the anger that we're seeing is insane. Where people that I personally know, people go to church twice a week, people I grew up with, are posting things like Trump is an effing idiot. Pelosi's an old hag. Biden is a senile piece of shit. Somebody actually said that. They would never, ever say that in person. Never. These are such nice people. And I don't know what brings out that anger. But the anger we're seeing now, I don't think I can compare it to anything I've seen in my life. I mean, how did this all start, right, with George Floyd? And we all know the situation. We all agree with it. We understand the racial inequality. We want to bring more attention, peaceful protests. That was over a month ago. It's no longer about George Floyd. No way. It has nothing to do with that right now. What's going on? I mean, people ripping down statues of George Washington, Theodore Roosevelt, who invited civil rights leader Booker T. Washington, which is the first black person ever to dine at the White House. Ulysses Grant, who's a general who beat the Confederates and ended the Civil War before becoming our president. I mean, that's a big difference from Jefferson Davis, Stonewall Jackson, but I'm condoning ripping down statues at all. But hey, who cares about the history of this country? Let's just erase everything. Doesn't matter anymore. In Seattle, we see people occupying Capitol Hill, which is called CHOP. It's all over the news, every single channel you watch. Capitol Hill Occupied Protest, that's what it stands for. Yeah, it's okay to protest peacefully. None of us have a problem with that. I get it. Shout, hold up signs, we get it. These guys shut down all the businesses in the area. They kicked the cops out. And what happened? Shootings in the area resulted in the death of a 19-year-old. A 17-year-old was shot and injured, as well as other shootings. And finally, the mayor's like, after saying, hey, these are great protests, everything's fine, don't worry about it, you took over this area. You took over an area in a city. Think about that. Just think about that for a minute, that we allowed that to happen. But now he's like, oh, well, we have to stop this. And of course, it takes someone to get shot, someone to get killed, more violence. For someone, it's like a traffic light, right? You don't see a traffic light come up until there's a car crash and somebody dies. It could be 30 times you almost saw an accident, screeching. It's not going to happen until somebody dies, and then we react. I mean, that's just the way of the world. I don't know what they would think. Like, did the mayor think something like this wouldn't happen when these protesters are carrying weapons, yelling in the face of police officers to the point that police officers are like, all right, we're done? As they're yelling at these police officers saying, hey, we should defund police departments? What did you think was going to happen? I mean, you have a mob of people who obviously are not working. I mean, it's been a month since George Floyd, right? Almost every state has opened back up. The biggest companies are bringing back employees. A lot of people have no intentions on going back. Keep extending those unemployment benefits after July 31st. Not that you don't want people protesting peacefully, but there's a lot of people, and probably good 5 to 7 to 10% around there, that have a total different agenda than what's going on. Trying to almost erase history, which is crazy because a lot of these people, these are not adults. These are kids that don't even understand our history of how we got here, of how they're living in the greatest country ever. If you don't like it, get the fuck out. You can leave, goodbye. If you hate it so much, leave. You should provide free transportation for anyone that wants to leave the country because it's going to cost a hell of a lot less than keeping them here and being on unemployment forever, living with everybody else, violence. Get out of the country. You have that option. Go anywhere you want. Why do you choose to be here and complain about it? And things like this just don't make sense. Maybe it makes sense to you. I don't know. It's crazy. But this mob of people going crazy, tearing down property, burning churches, which is ironic since our politicians are against you attending church because of coronavirus, but burning down a church, hey, no problem, man. You can do that. We're not going to say anything. Isn't it kind of amazing when you think about it? Our politicians on both sides refuse to say anything about this. Simply because these crazy people get the same vote as you and me, hardworking individuals that have families, respect the law. I'm not looting thousands of businesses, most which are in low-income neighborhoods. Irony in that, too. Wealth inequality. Why are you destroying these businesses, people that work their whole lives? Doesn't matter. But I'm going to say something right now, probably going to offend people, because everyone gets offended these days, right? Everybody's offended. Everybody's so sensitive these days, but it needs to be said. Because we look back at history, we need to remember, peace is only achieved by using force or the threat of force. Many times that results in violence. That's the way it is. For example, Americans didn't achieve their independence by telling the British in the 1700s, hey guys, is it okay if we don't pay those huge taxes you just levied on us for the tea we drink, lead, gas, paper, to create additional revenue for royalty officials? And also tell English troops who were allowed to occupy in private homes, just storm into people's homes and live there without their permission. You really think we're just going to say, hey, you know what? Could you please not come in my house? Could you leave, please? You really think that's going to work? We had to fight for our independence. You have to fight for those freedoms. They don't come for free. Unfortunately, it has to come to things like that, Revolutionary War, everything. And we tell Hitler, hey, Mr. Hitler, could you stop taking over every Czechoslovakia, Austria, Poland, Denmark, Norway, France, so many other countries? And please, could you stop killing so many of the Jewish people? Because you know what? That's really not right. No fucking way. I mean, he needed to be stopped. It required a world war, violence, force. It was the only way to prevent Hitler from taking over the world. You can't be nice about things like this. And I love people who provide quotes, which I never understood. Like social media, right? It provides a way for everyone to have a voice. Why are you quoting somebody else for? It's your voice. Say what you need to say. Anyway, that's a personal thing, a little pet peeve of mine. But one of those, Albert Einstein, someone I admire very much, where he says, peace cannot be kept by force. It can only be achieved by understanding. An absence of war based on force and military threat is not peace. The last time I checked, Einstein, pretty smart cookie, but he was a scientist. He devises theory of relativity, which revolutionized the world's understanding of space, gravity, time, universe, quantum theory. I mean, he's credited for inventing paper towels, laser pointers, early adopter of solar power. I mean, unbelievable history. But it's a little ironic that Einstein, the person who said peace cannot be kept by force, it can only be achieved by understanding, is also the same person that wrote a letter to Franklin D. Roosevelt in 1939 urging the U.S. to develop an atomic bomb before Nazi Germany did. which the U.S. said, you know what, that's a pretty good idea, which we used to bomb the shit out of Hiroshima, Nagasaki, to retaliate for the bombing of Pearl Harbor, which killed over 250,000 people. It's safe to say, Japan never fucked with us again. That doesn't sound too peaceful to me. Again, I'm a huge fan of Einstein. If you're going to quote somebody, how about this quote? Every book has been rewritten. Every picture has been repainted. Every statue and street and building has been renamed. And every date has been altered. History is stopped. Nothing exists except an endless present in which the party is always right. George Orwell, 1984. Pretty interesting. My point here, I know it's a political year, and I'm bringing this up because it matters to your life. It matters about your financials. It matters. It does. This needs to be said. But we have our asshole politicians who don't give a shit about you and me. Racial injustice, wealth inequality, they don't care. They don't care. They're going to dress up and kneel and take pictures, whatever they need to do to get votes. So they're going to do anything to stop these people from destroying public property, murdering police officers, tearing down statues, looting businesses. Why? Because these votes, especially now, are critical for both parties to gain power. And that's all they care about. They're going to tell you everything you want to hear. They're going to support anything that a poll tells them is going to result in more votes. That's politics. You know, I don't care which side you're on. I don't care how far left, how far right. You know it's true. These people don't care about you. You go back and look at politicians and how many times they switch back and forth. It's all based on polls to get votes. That's why you're not seeing anything being done in the middle of our streets. I got to tell you, these looters, people who are ripping down statues, these people need to get the shit kicked out of them for everyone to see. This way they know what's expected when you decide to take the law into your own hands. Beat them down. Let people take pictures of it. If that happens, you're not going to see people ripping down statues anymore. But what's going on with the world? I mean, how do we let this happen to where mobs control law-abiding citizens, can control our politicians, can take control of our streets and businesses without any repercussions? Hey, when did America become so soft? Hey, even when it comes to disciplining our kids, we're told you got to use timeout. You got to use a timeout. Go in the corner, use a timeout. And imagine your parents, right? I'm 48. Say you're 40. Imagine your parents putting you on timeout when you did something wrong as a kid. Or say, hey, you're going to be punished for 2 or 3 days. But I grew up in Queens. I wasn't the best kid. I got into a lot of trouble, hung out with the wrong crowd, did stupid things like steal cars for fun, always brought them back. But a ton of stupid things. My dad called me stealing a car back then. We would be like, son, you know what? You're not supposed to do that. That's not nice. And you know what? I'm going to punish you for a couple of days. If he said that to me, 3 days later, I would have stolen another car, picked up my friends, and got some pizza if that was the punishment. Instead, I got a beating. And you know what? I deserved it. And I never stole a car again. That's the past. Long, long past. The bad kid. I don't regret anything I did because it builds a person you are, all the mistakes you made. I'm just proving a point here. Because how do we get so soft as a country where everyone is offended? Gays are offended. Blacks are offended. Puerto Ricans are offended. Women are offended. Actors, actresses. Everyone gets so offended now. They're so sensitive. I mean, I'm not offended, given that I'm a 40-year-old white man who works 15-hour-plus days, trying to be the best dad in the world to my 2 beautiful daughters, support my family, run a business that I'm employing people. I'm helping investors make smart decisions so they can retire early, provide a better foundation for their families, and make a great living. And you know what? I'm the enemy of America right now. I'm the one that's privileged, need to pay more taxes, need to give more money away to people who refuse to work. And some of those people who lost their jobs, I get it. That's okay. Those are not the people I'm talking about. But I'm not privileged. I worked my ass off to get where I am today. There's not one American that can't do the same in our country. That's open to you right now. That motivation, go out and grab it. Where else could you do that? What other country can you do that in? We've gotten to the point where we just blame everyone else. Where if we have different beliefs than someone, that makes us total assholes, outcasts. Like if we don't bow down to the American flag, you're racist. And why did Drew Brees change his mind? It's okay to not kneel, since that flag means something different to everyone. And he has a military background. He said, I'm not going to kneel. I have a military background. I'm not going to do it. And got pressured to do it. You should have the choice to kneel or not. But there is no choice. It's either you kneel or you're a racist. I'm not saying whether you should or shouldn't. That's your choice, but it's your choice. And if you want to wear a mask to prevent the spread of coronavirus and you're older, you want to wear a mask, don't yell at people who don't want to wear masks unless they're really doing irresponsible stuff and getting up in your face. That's different. But how have, as a nation, we've become so angry with someone that has a different opinion? If you like Trump or if you like Biden, we're being forced to pick or choose or hate each other, where our foundation of this country was built on discussion, listening to both sides and coming up with the best option. It's not like that no more. It's either this or that. There's no middle ground, which is incredible because that's how the major deals get done in the world. The deal doesn't go, hey, I got to pay $20 billion for your company. Okay, that sounds good. Deal done. No. All right, how about $17 billion? Okay, well, what if we do this? Okay, you're bringing over executives. Okay, we're going to, whatever. You know, it's a negotiation. Then you come up with the best solution that works for two parties or even more than two parties who are involved. It's not, this is what I want. No, forget it. I mean, now a bit of political world is both sides want an infrastructure package of $1 trillion to $2 trillion, around $1 trillion to $2. Both of them want it for 4 to 5 years now, and nothing has gotten done. Why? You both want it. We need it. Our bridges are falling down. Water pipes are old. We need to update our infrastructure. It's important. You see dams being broke. This happens. This is real. There's reports. Look at the things that I cited, infrastructure reports. Which company's going to benefit? They're waiting. They know they need this. This is something that could result in a lot of people dying. You both want it. Why can't we get it done? Why? But you're looking at everything going on. I mean, I don't know why America has gotten so soft. And we should have simple laws in place. You destroy property, you get the crap kicked out of you. If you resist arrest, you go to jail. And if you try to grab an officer's weapon, you automatically get shot in the head. That should be a law. I mean, what is your intention if you're going to try to grab a police officer's weapon? What is the intention? Why would you do that? I have no idea why you would do that. What's the intention? To grab it and to kill somebody or shoot somebody. You're grabbing a policeman's weapon. I don't know what the expected outcome of what you think it's going to be. But if you do, you have to think you're going to die, right? But yet, we're rewarding people for resisting arrest, stealing a weapon off a cop's belt, then trying to shoot it at the cop, and the cop gets charged with murder for shooting that person who tried to stole his weapon and shot it at him. I mean, this isn't a black or white thing. This has nothing to do with racism. Anyone grabbing a cop's weapon should get shot in the head, period. That's it. That should be a law. Then nobody's going to grab a gun or try to grab whatever weapon that they have. But just to sit back and watch nobody do anything, and the Democrats do nothing because they need the left vote, to see the president say, hey, you know what? Things are bad in Seattle. All you need to do is ask for my help. You get a president. Isn't it your job to keep the peace? And even if a governor's a complete asshole and loses total control of a city, which we're starting to see, to where innocent, hardworking people are scared to walk in their major cities at night. That's why we're having curfews. And these change reckoning, a reminder that there are laws that all of us need to abide by. You can't sit back and watch people desecrate private property and statues, no matter what side you're on. They change our history. We want to rewrite history from 30-year-olds that who knows if they read any book or anything? Maybe they're older. Maybe they do know a little bit more about history. But if they knew about history, why you tear down statues of people who did not support slavery for? But we have to have that reminder that we all need to abide by the law. That's how we have peace. That's why we have the greatest country on earth that gives anyone, of any race, color, gender, you could succeed in this country. You can. You're going to have to work at it. A million people are going to tell you no. Use it as motivation. But where else do you have that opportunity in another country? You let me know. Because I don't. We're losing it here. Things are not getting better. They're getting worse. And Americans are getting more angry and more angry. I mean, just every social media post. When I go on my social media profiles, it's just scrolling down. A homeless man getting set on fire, or someone bashing Trump, someone bashing Pelosi. That's all it is. And it's all being fueled by people that have an agenda. They want you to pick and choose. They want you to hate because you're going to watch more TV. They're going to make more money on advertising. And the politicians want that because they're going to get power. They don't care about us. They don't. Come on. You know that. I don't have to tell you that. You really think our politicians care about individuals? No way. They care about polls. They care about getting elected. But don't fall into this trap. I mean, hating someone that has opposing view than you, you know what I'm talking about. You're on Facebook and you're in a group and you see someone comment and whatever, just whatever side you're on, and they comment about the other side. It pisses you off to the point you really don't want to talk to them anymore because of the political views, because you're supporting someone that really doesn't care about you. Think about that. Because you talk to this person personally, go over their house. It's the nicest person in the world. They're cool. It's nice. It's fun. But you fall into this trap. The politicians and the media are winning. It's exactly what they want. That's how they gain power. We need to smarten up here because it's getting worse, not better. I mean, not being able to walk the streets in our own cities for fears of getting beat up or hurt. It's got to stop. We need to put our foot down. And this will result in the consequences of this, whether financially, it impacts all of us. All of us it impacts. It's important that this needs to be said. I don't give you poor, middle class, rich, impacting all businesses, the stock market, everything we do unless we take a stand. And we need to take a stand. And watching while all this shit takes place is not taking a stand. It promotes more violence that you're not getting in trouble for it. And it's getting worse as each day goes by. So hopefully we'll see some change. End of rant. Can't wait. FrankCurzioResearch.com. Can't wait for my email box to light up after that one. But I want to hear it. Agree, disagree, whatever. Doesn't matter. FrankCurzioResearch.com. Now, moving on. Not easy to do after that. But moving on. Great guest today. His name should be familiar with is Daniel Creech, who's now a senior research analyst at Curzio Research. I mean, great interviews since we're going to talk about a brand new podcast format that we're bringing to Wall Street Unplugged. Don't get nervous. Got the same qualities, just going to enhance it. A lot of cool things coming. I know you're going to love it. Also, Daniel's going to share his opinion on the markets. Different opinion than I have. That's what it's about, being independent. That's what Curzio Research is. I never tell any of my editors what to write. You have your own opinions. I want to hear it, which is perfect. And that opinion is going to shock you because it could result in the stock market going a lot higher from here. And he makes a great case for it. Supported by good facts. He's going to share that with you. Basically, give you that one simple measure that few people are talking about that could drive the market a lot higher. Just going to share his favorite sectors and stocks with you, including one controversial name. It's really out of favor. Be a cool idea that I'm not seeing anyone recommend out there. But definitely an interview you don't want to miss. Really good stuff coming up. Then in my educational segment, I'm going to break down the two sectors I love most right now. These sectors, one of them is going to surprise you. One of them is pretty obvious, but still, a lot of people are not pouring money into it, and you should. Because after you hear the facts, after you hear my research on it, you should run. Hopefully you'll run to invest and get exposure to these sectors. So a great educational segment coming up. Before we get to that, let's bring in senior research analyst Daniel Creech. And here's that interview right now. Daniel Creech, thanks so much for coming back on Wall Street Unplugged.
Hey, Frank. Great to be back.
So a lot has changed, right? I mean, you've been working here, I'd say close to 3 years now, and you We're here for 2 years. You moved back to Arizona, and now you're back. I don't know if that's a good thing or a bad thing that you're working in the office with me again. I'm not too sure, but it's really glad to have you back, bud.
Yeah, time will tell. But no, it's good to be back. It's good to be back in the office and back on the podcast. Yeah, I was here for almost 2 years. Did a big loop around the country, and now I'm back to Florida. So life is good, man.
Nah, that's cool. That's cool. So we're gonna get to the reason why you're back in a minute, but first I want to go because we discuss the markets a lot. You follow all the stocks in my portfolio. You help write the alerts for me. For anyone who's subscribed, Daniel's is a guy behind the scenes that does a ton of work. Listen to all the conference calls, like just send me bullets on everything. Really keep me up to date with everything that's going on with the portfolios. I want to get your opinion on the markets as someone now that I don't know if that's a good thing or a bad thing that I turned you into a stock and market junkie. But I want to get your thoughts on the market as someone that reads and listens to a lot of these conference calls, covers them during earnings season, what's going in the market, understands the Fed. I want to get your opinions on the market. Where do you think we're headed after this huge rally coming off, that big crash? But I want to see what your thoughts are on what's the next step, right? That's what everyone wants to know. What's going to happen next? And there's a lot of opinions out there where we're hearing everything from we're going to see another crash to we're going to see stocks soar from here. So let's get the Daniel Creech opinion. What do you think?
Yeah, what a time to be alive and an analyst and a stock market junkie, like you said, because you can't talk about the markets, in my opinion, without talking about the goofy reality that we're in. And what I mean by that is financially, we are somewhere between a Willy Wonka movie and the Wizard of Oz. And the gentleman that is having, I would argue, probably the time of his life in a goofy sense, that is pulling all these financial levers and basically has a giant soundboard of all kinds of craziness, is Jerome Powell, the Federal Chair. And so if you think about where we're at in the markets, and then you think about, hey, the markets are always forward looking, public companies trade at a premium, you have a lot of money sloshing around, that's all great. And a lot of people already know that. But when you look at the discrepancy or the difference between the stock market being basically back to near all-time highs and Main Street and the economy still slowly reopening because of the coronavirus, the only reason you can connect where we're at in reality in the stock market is because of the role the Federal Reserve is playing. And that role is simply that they are making the reaction to the 2008-2009 crisis look like nothing. They are basically backstopping, they're printing, they are putting money directly into people's pockets. And, in the short term, you can push water uphill a long way. So often in life, my family has told me, they've taught me a lot of great lessons. And the thing that keeps coming back to me is often the hard or difficult thing to do is the right thing. So if you apply that to the financial markets, with everything else going on, we'll get into the election coming up in a minute, but it's hard for me not to be optimistic and bullish, as goofy as that sounds, because they're going to continue to push tailwinds to try to get asset prices higher. I do expect a lot of volatility going forward, but ultimately, I think the path of least resistance is higher.
So there's it's great. This is a great segue because you're talking about the Fed here. You talk about Powell, where June 10th, he had the Federal Market Committee. That was the meeting that they had. Everyone was paying attention. And Powell said, listen, what I took from it was, the Fed's not worried all about the balance sheet, which I thought was amazing since it's over $7 trillion now. More QEs likely on the way. We'll continue to purchase assets in terms of like ETFs and things like that. In the credit markets, that made big headlines. But there's something that you're covering that you talked to me about, we talked about, and it went under the radar. And he said something significant. He said the Fed was considering yield curve control. And it went under the radar because I bet most people are not familiar with what that means. So, that was in addition to his asset purchases or whatever, but it basically pins the short end of the curve just above zero. So it avoids a spike in yields, which we can't have with how much debt we have, right? Especially on a Fed's balance sheet. The last time this was implemented, 1942, which allowed the U.S. to keep rates low, which was 2.5% back then. It basically allowed the Treasury to fund cheap debt during World War II. It lasted 9 years until 1951. Talk about that, because and Powell said we're considering yield curve controls. I know you've done research on this. What could that mean for the stock market?
Well, in short, you could see a massive bubble and a huge skyrocketing stock market. Now, the old saying is history often, repeats itself. It doesn't, it rhymes, but it may not necessarily happen exactly the way it did in the past. you gotta keep coming back to reality. So it is scary that they're talking about this, even discussing it. But in reality, more than likely, they're probably going to do something like this. Even if they don't do quote unquote yield curve control, they're going to keep pulling levers and keep interest rates low. But back to your point, the interesting thing was when this happened in the 40s, and that was because they wanted to keep costs low to borrow for World War II. From 1940 to 1951, the stock market had a massive run higher. It went up over 80%. Now, that's after starting the early 40s with negative years. So the PE, the other interesting thing is the PE went from 7.7 times to 21.9 times price to earnings, okay? So that was from 1942 to 1946. That is a massive, massive increase. And when you compare that to today and say, okay, well, what if we keep expanding things? Not to mention, yields, the 10-year treasury was over 2% back then. Now they capped it, I believe they capped one of them at 2.5 and all that. But again, it doesn't matter exactly the levers they're pulling. They're going to keep interest rates lower for longer. As you said, it's ridiculous that he's so blatant about it, but I guess you got to give him credit for being honest to an extent, honest in quotations. They don't care about the balance sheet. They also don't care about how 0% interest rates hurts your mainstream people. Because if you've been, I would say, a common sense person and putting a little bit of money away, you're not earning anything on that savings. So that forces you to put that into riskier assets because you have to keep up with the cost of living. So going back into the 40s, I'm not saying we're going to have that type of expansion now. And if you look at, I know we're always trying to give free sites and information to listeners. And I know you've talked about FactSet a lot in the past, but they just had a great report, I believe last Friday on an earnings insight. And they showed that right now, for the past 20 years, our PE ratio has been around 15 times. Well, 20 years is quite a bit. So let's look a little closer. For the last 5 years, it's averaged about 16.9 times. Well, we're at 21.9 right now, which is kind of funny because that's where we were back when in 46. So we're at 21.9 forward earnings right now. I'm not saying we're going to 60 and have a huge jump like we did in the past, but like I said, the path of least resistance is continuing to be higher because of the financial levers they're pulling, just like they did back in the 40s.
Yeah, and guys, remember, those rates are 2.5%. They're zero now, and I mean, even if we look at the average PE, I think for the last 10 years, I think you mentioned 20s and 5 years, around 15, and that PE exploded, over 150% higher. Not that it's going to be 35, 40, but it could, like the new PE, that new norm, if they do this, which they're kind of implementing already, right? I mean, they want to put the yield curve control in, but it's kind of, they have it anyway, making sure rates are as low as possible. Just look at mortgage rates, look at rates around the board, across the board. So it's something that people aren't talking about, where we always look traditionally at a PE ratio and look at a 5-year, 10-year average and say, wow, this is so expensive. But if earnings do bounce back to the levels that everyone is expecting, right? Wall Street is expecting. This is why the market's going higher. If it does, we could see this market continue to move higher because, again, with super low interest rates, no place to put your money. And look at the rest of the world globally, right, Daniel? I mean, where are they going to put their money? There's a ton of money on the sidelines right now. So when we look at everything together, it is a scary market. We're doing this on Wednesday, watching the market come down 650 points. By the time people listen to this, it could be up 650 points. We don't know, right?
Exactly.
But, looking at, this is a very, very big story that I feel like it was thrown under the radar. And again, thank Dave for bringing it to my attention. But when you just compare it to the last time they did this and how stocks exploded, and we're seeing them go higher now, there could be a lot more room to run, but it makes it a very dangerous market, especially if COVID's in there and China relations and stuff like that, which is pretty crazy. Which then let's go into the next segment, which is, how do we play this? If you think stocks are going hard, you're looking at sectors, you're looking at stocks again, you're doing it all day just like me. I know you love it, and we discuss the markets all the time now, especially we're in the office together. What's some of the plays on this, or maybe some of the sectors that you like?
So I'll give you a kind of a longer term idea that I'm still digging into, and then a shorter term play, but I'll start with the long. So comparing back to the 40s, during that time when the stock market performed well and they were doing that yield curve control, it shouldn't shock anybody that housing prices did very well. So you want to look at housing and housing related stocks. So you can start digging into home builders. CRA members may be seeing something like that soon, but you got to look at home builders and anything that'll benefit off of low interest rates. So your huge companies that can borrow money easily. So your FANG stocks, your stay-at-home plays, the well-capitalized stocks are going to continue to do well in a 0% environment. And if you have a little risk and appetite and you want to kind of mix Vegas in with the stock market, 0% interest rates, access to capital markets, your zombie companies and your high bets are have a potential to go continue higher, although with a lot of volatility. I would look at home builders, and I would also look to hedge that because I do think you should be long because of the tailwinds we have. But if you're long, I think you have to be hedged. And I don't mean hedged with just cash. I mean hedged with gold exposure or silver exposure. We can get into that if you want to in a minute. Switching to short term, because of all the fear and uncertainty surrounded by the coronavirus right now and the shutdown, we've had an excellent recovery in a lot of different stocks and sectors. But what's really got my attention right now, and full disclosure here, I'm biased towards this sector anyway, is the insurance sector. And I'm looking at both property and casualty companies and life insurance companies. Obviously, the big difference there is everybody dies on the life insurance side. So you have to run your business to a certain extent to keep those reserves and protect them because you're always going to have to plan on payouts. On the property and casualty side, you have to pay for things like, renter's insurance and auto insurance and different things like that, but you always don't have a claim. So you can take in a lot of capital, invest that, and not pay a lot of claims out. So the business model on the property and casualty side is tremendous just as is. Now, a lot of those stocks, and I'm talking about W.R. Berkley and Travelers, Chubb, branching over to life insurance side, Bright House Financial, a lot of these stocks have not come back to where they were trading before the coronavirus hit. And several of them are between 30 and 50% still off their previous highs. When I was digging through the conference call transcripts, the interesting thing to me is that the market is pricing in the insurance companies are going to be on the hook for business interruption. So what did we have? We had the coronavirus outbreak. We had a lockdown, which go off on a little rabbit trail here. I still can't believe, and I know it's easy to play Monday morning quarterback, but I cannot believe, I remember talking to you several times. We literally tried to stop the world from spinning. And I know it's a pandemic and people are dying, and I don't want to make light of that, but trying to pause the economy, I think everybody has come to the conclusion that that was a mistake. And you've seen even people down here in Florida and Texas. Hey, I know cases are spiking for coronavirus. Hospitalizations are going higher. That's one of the reasons for the market sell-off today. But I really don't think that we're getting to the point to totally shut down the economy. And I think the market is going to price that in. Getting back to the insurance side, sorry about the rabbit trail there. Getting back to the insurance side, a lot of people are fearing that insurance companies are going to be on the hook because when companies have business interruption, a policy, they have to have physical damage. So the government telling you in this office building, hey, you got to shut down, can't go to work. If you think you can go to your Travelers or whoever insurance company without proof of physical damage that you shut down, they're not on the hook for that. And I don't want to sound rash because I know insurance companies, aren't the greatest businesses at, everybody has something bad to say about insurance companies like everybody else, but you cannot just you can't sign a contract with somebody and then have them go back and say, oh, well, even though this isn't covered, you owe us all these billion. And I think that risk is being priced into a lot of these stocks. And the easy way to get out of that, just because of the world we live in, is let's say Trump or whoever in Congress comes out and says, yeah, the terrible insurance companies are just like big oil, big banks, et cetera, et cetera. So they are going to be on the hook. Well, I don't think it would be a week later that you'd have Jerome Powell come out and say that he would backstop insurances just like he backstops everybody else. Insurance is a lifeblood of financial plumbing in the economy, and it's going to be around for a long time. And I think you ought to look at the property and casualty very, very hard right now.
Now, what are some of the names you like? You mentioned a few, but what maybe one, two? What are some of the ones that you like there? Because there's one or two I think that are doing okay, but a lot of this industry has sold off, and it hasn't even come close to coming back yet.
Right. Yeah. Like the Progressive Group is doing well as far as the stock price and rebounding. I don't have them in front of me, and again, they might be way down today, but it's very good back to its 52-week highs. A couple really well-run companies are W.R. Berkley. The ticker there is WRB. Chubb Insurance, CB, are big, well-capitalized, strong balance sheet, property and casualty. And then, like I said, life insurance, Bright House Financial has got my interest, but that's more of a life insurance play in that side of things. So
Well, I'm going to give people a little insight to Daniel personally here, because Dan's a person that's always worried that someone's listening when it comes to Alexa, because I have an Alexa in the office, and he's always like, I hate that thing. And I'm going to say something because you're right. Because before we went on, you're in the office and you stepped away this way. You can take the call. This way we're not right next to each other doing this interview. But, and I said, okay, we're going to talk about this, just bullets, right? We don't, even with all my guests, I never give them everything we're going to talk about because they seem to answer everything right up front. I like to just, what are topics you want to talk about? And I just said, oh, insurance, what do you like? And you said Bright House Financial. Right before I pull this up, right before we actually went on air, I just checked my email really quick, and I looked at their website. I think it came up to CNN or whatever because it was an article, a post, and the ad on there was Bright House Financial, and it was right after you mentioned it. I never mentioned it ever, and literally that ad for Bright House Financial came on. I don't know. You mentioned in my office. I do have Alexa in here. I just thought that was funny. I'm like, wait a minute. I never heard this. This is the first time you mentioned. I mean, I heard of the company before, but it's the first time we talked about it. And you said, yeah, I kind of like this company. Anyway. I know how you feel about that.
Yeah, it's terrible. I think our next product ought to be tinfoil hats with a Curzio Research logo. That's our next product.
I know, right? I know. So let's get into another topic here, which you're very passionate about, which is politics. We have an election coming up. We're seeing a lot of crazy stuff out there. We're seeing politicians on both sides kind of say, kind of watch what's happening, right? I mean, just there are peaceful protests out there. We all see it, and I just had a nice rant on it. But this election is going to have serious implications for investors. I mean, serious implications for investors. So, how do you play this, and what are your thoughts on it from someone? I know that you're really passionate about this. So, the stage is all yours, bud.
Yeah. So we'll talk a lot more politics in the future, and I want to warn everybody. It's not that I follow politics because I enjoy it and I think highly of them. I absolutely don't. I follow them because, in my opinion, you have to. Because what they do and what they affect affects you directly, and it's affecting your money. So if you put your head in the sand and ignore politics, or kind of take them for at their word instead of really what they do, I think it's a big mistake. So what do I mean by that? Going into what they say and what they do. When the first CARES Act passed and the relief fund of $2 to $3 trillion was passed, they have these bonuses in place. So you have a situation where a lot of people are getting more money not to go to work right now. I know everybody's scared and there's a lot of uncertainty around the coronavirus going. Well, that supposedly runs out at the end of July. And anybody that doesn't think going into election year, there's going to be more stimulus, more money printing, and more injection of that money directly into consumers' pockets for votes, in my opinion, is just not paying attention. And I don't care if you're right or left, it doesn't matter. So whatever stimulus that is coming out in rumors, there will be another stimulus package, in my opinion, very soon before the end of July. Because if you're Donald Trump, you can't afford to tell people, hey, even if you're not back at work, your unemployment bonuses and your money's going out, there's no way they would ever vote for you. And right, wrong, or indifferent, that's the way that game is played, in my opinion. So we have a lot of tailwinds going. The other thing that's going to be, so you got a lot of people, you have people with money in their pocket, even if they have to stay home, or if people get nervous because of the recent spikes in cases, and we have to continue to watch the deaths too as well and see if that spikes. But even if people calm down and say, all right, you know what, I'm going to back off and nothing's shut down, but I'm just going to stay home for a week, or I'm going to back off some things because I'm nervous. Well, human nature, you're not going to stay home for the rest of your life. You're going to get pented up, and you're going to say, all right, well, screw it. I'm going to go out now and spend money and do this or that. So you have this kind of self-assurance. Hey, you got money coming in, even if you don't have a job in the short term, and the economy is going to survive regardless. But you have a lot of money in the short term going into it. And then you're also going to have another stimulus in the form of some type of infrastructure bill. So how do you make money off all this? Well, you want to put your money into some infrastructure plays or other related elections. And we could joke around about this, but what do you always joke about that you should buy coming on into an election year? You want to buy marijuana stocks. So I would start digging into those, because every state is basically as broke gets, and they need revenue. So over the next 2 to 3 years, the things that are going to be legal for state revenue, I think, are going to expand dramatically. Everybody's going to be Vegas soon, Frank. And in some ways, that'll be all right.
Yeah, it is pretty crazy times and what's going on. Again, I just had a long rant about it. But and the reason why I wanted to bring up the political front is the real reason you have come back is you're going to be part of this podcast now, where we're going video. We're going to be segmenting, have segments where it's, maybe the rant at the beginning, and then, segmented into 3 different podcasts. You can listen to the whole thing at once. But we're going to be doing videos of this, setting up a studio. I have a studio up here. We're going to be setting it up to where you can watch us do the podcast, do the interviews as well, where we have the technology, great technology, quality that's better than the CNBC and the videos that you're seeing now, through a technology that we're using. Thanks for the person who's taping this right now to help me with all that. But really exciting stuff coming up, and I really appreciate you making the move, because it was a conversation we had, and I said, hey, you know what? Why don't you become part of this podcast? We'll be able to talk more about news back and forth, bring on different guests, just for even politics, everything that's going to relate to your money still. But we're used to having analysts on here and stock picks, and we're going to continue that, especially putting those things in our paid product dollar stock club and things like that. But I'm really excited about it, Daniel. So I want to get your thoughts, because I know you came back. We are going to be talking about a lot of cool stuff. It's going to be edgy, and the video component, I think, is really going to be cool and draw a much bigger audience. But I really hope that you're excited about that, bud.
Yeah, I couldn't be more excited, to tell you the truth. When you mentioned that a couple of months ago, I thought, yeah, that'd be really exciting. Personally, I've always been a huge fan of radio and broadcasting. I'm a huge fan of Rush Limbaugh. I'm a huge fan of Howard Stern, just the way they deliver. I love paying attention to stand-up comedians and the audio version. So, yeah, I couldn't be more excited about getting to share thoughts and ideas and interview different people and play a bigger part. So, it was no big deal. It was just 30 hours on Interstate 10, and here I am.
I can't even make that drive, man. I don't know. I would have had someone else drive the car and maybe it's definitely safer. Maybe that's why cars are flying off the lots right now, right? Because nobody's going to take public transit. That's one thing, right? We talk about the coronavirus. I'm not, for me, if I get it, I'm not as worried. And if you're older, you should be wearing masks. And I get that point, practice social distancing. But I could tell you, as someone who's kind of like, hey, if I get it, I'll be okay. It doesn't mean I'm going to be irresponsible. There's no way I'm taking public transportation. If you take a plane, at least they wipe down the plane afterwards. But people constantly getting off buses and trains, you don't know where they've been. And I don't think they're taking a temperature before and after like they I don't know. That's pretty crazy. So it's probably safer that you did drive the car here.
Yeah, absolutely. Yeah, not a big deal.
All right, Daniel. So great stuff. Talked about a lot. Even sharing ideas. And I know that people listen to this are going to see how far you've come, because I had you on the podcast numerous times since you've been working for us for 3 years, and just to see how far you come and what we're talking about in Fed and policy and everything. It's really cool. It's really, really cool. And I think everyone's going to be really happy that they're going to hear more from you, especially on Wall Street Unplugged. So thanks for coming on, bud. I appreciate it.
Absolutely, man. Thanks. And looking forward to more. Take care.
There's great stuff from Daniel. You hear a lot more from him. He does a lot of stuff behind the scenes. He knows every stock that we have in the portfolios, covers them with me, helps out tremendously. But just listening to that interview, it makes me proud. I talked about having a clinic, or starting a clinic, which if I do, it would probably be 2 months from now. I'm getting lots of emails, keep them coming in, even from millennials, where just 5 or 10 have a class maybe a couple times a week. Hardcore. It's going to be tough. I'm going to be all over you guys. But if you listen to Daniel 2 years ago compared to now, it really is amazing. It makes me proud how much you learn when you're really engulfed. And that's what happened too when I was just thrown to fly with Kramer. Having to research, just expanded everything, because I was a value guy from my dad, and just going to Kramer, we had to know about everything and learn about growth. And that's why I always say, don't be fixed on one investment style, even if it's technical investing, technical analysis, fundamentals, value, whatever, top down, whatever approach. You should always, any way that you can make money, because there's different market conditions. There's times to buy growth, there's times to buy value. And the more you know, better the chance that you can have great returns, and you can also have the great returns while limiting your risk. But you see him, he said, he's biased towards insurance because before he worked here, he worked in insurance for a long time. But for me, it does. It makes me proud. And, with that clinic, that's what I want to do. 3 years, guys. And I put him up against most of the guys you're seeing on CNBC. I'm not kidding. And that's how good he is, because he's motivated. And that's what you have to be. If you're looking to sign up to that program, again, we got a lot of stuff coming out. We got my security token going at launch as well. Very exciting stuff, news to share with you, where it goes free trading in a couple months. And, launching a new product, a lot going on right now. So I would say in about 2 months, I'd like to start that. But the one thing you need to be is motivated. I could teach you anything about the stock market. I want you to have a little knowledge of it, of course. but you have to be willing to put in the work. And if you don't, you're going to be tested. You're going to be thrown out of that class in 2 seconds. This is for someone that wants to be a research analyst, that wants to learn how to become a better investor, that understands risk, understands that you're going to make mistakes. How do you handle those mistakes? That's the biggest lessons when it comes to being a research analyst. Because we're all going to be wrong from time to time. I don't care who you are. Every great investor, we're wrong unless, you're a high frequency firm front running the markets and being allowed to do that. That's different. A lot of us don't have access to that. But that's what this class is going to be designed for. So I want to hear from you. Getting a lot of millennials email in, say they want to be a part of it. I'm trying to start that up in about 2 months. Got a lot on my plate before that, a lot going on, a lot of great stuff, initiatives. Again, when you listen to the podcast and what we're doing, it's going to be really cool. Video formats. You're going to see everything on YouTube now. It's still going to be on iTunes. We're going to have one long podcast and also separate maybe, the rant, the educational segment from the interviews where you can just listen to those if you want. So it's going to be really, really cool. You're going to see us in the studio doing this. I'm really excited to bring this to you. Just the whole media aspect. And, we have the studio set up already and just have to add to it. And Dan's going to be a big part of that. Having his own opinion, having his own agenda, and it's going to be really, really cool. So I hope you guys are excited. I'm excited. I'm going to bring you so much more, so many more guests. Now, because of you, where we're seeing so many downloads of this podcast, we could get on almost any guest, especially if they have a book or whatever. So, really, really cool stuff. And I want to thank you guys for listening. And it's going to get better and better and better here at Curzio Research. So really excited. And hopefully yours too. So let me know, frankcurzioresearch.com. Send me an email. Love to hear your thoughts on it. But let's move on to my educational segment, which is about 2 sectors that I like right now. Daniel mentioned one of the obvious ones, which is housing. And if you're looking at mortgage rates, and guys, do the homework yourself. What does 3% on a 30-year mortgage rate mean? I shot a video of this, found on Twitter, YouTube, live video, just showing a calculator. Simple. Say if you want to buy, I'm using this for big figures, not that everyone could afford $1 million house, but if you put $1 million in the home price, the down payment's $200,000, and you're looking at 4.5% on a 30-year, and with taxes, other fees, home insurance, it comes out to $4,900, pretty close to that. And 4.5% was where rates were, 2018? Not long ago? Now they're pushing 3%. So when you put 3% in that mortgage calculator, that results in a $4,200 payment, less than that. $700 you're going to save a month on your mortgage. And put that in a calculator. 700, doing it right now, times that by 12. You get $8,400. Times that by 30. That's $252,000 without even saying you're taking that money and compounding it and growing it. Buy a house. The market is ripe right now. There's very little supply on the market. I talk to real estate agents everywhere. If you're a real estate agent and you're saying, please, I probably have at least 4 dozen, maybe more, real estate agents. And for me, I started looking for a house where, we've been in the same house for, I think, 10, 11 years now. So I was getting big, got more stuff, want to, get a little bit of a bigger house, nothing crazy. We started looking. I don't even know if we're going to buy a new house yet. I'm not sure, but we're looking. Every real estate agent I spoke to, every single one, went to about 6 or 7, not include real estate agents, but builders in different areas and stuff. Every one of them. COVID-19 slowed it down. May was okay. May started really coming back. This month is exploding. You can say, well, it's pent-up demand. There's not a lot of supply in the market. They're building everywhere. Interest rates are low. They're going to stay low forever, not just for mortgage rates, which makes sense, but we're in a market where assets are going to be incredibly inflated. That's what the Fed is doing. They're going to do it long-term. Join it. You can hold up a sign and say, can't believe the Fed's spending this much money. They're crazy. They're destroying everything. Or you could get wealthy from it. It's up to you. Make the choice. You do whatever you want. I don't care. I'm just telling you. And if you can't afford a house, buy a couple of home builders because, man, they are on fire. I'm talking about demand that I'm seeing in real time. And it's not really factored in. I mean, these stocks are not trading. You got Pulte, I think, is off its highs. You have Lennar about 10%, 15% off its highs. Toll Brothers is want to say 20, 25% off its highs. So they've come back. I mean, they've gotten crushed in COVID-19. They've come back, but not anywhere near their 52-week highs. Outside of maybe one or two of them, but get exposure to this industry. I mean, look at where Sherwin-Williams is. The Home Depots we had in our portfolio, we sold it. They made a very nice profit in a short time during the whole crap's going on with coronavirus. It's still gone a little bit higher since then. I just think it's incredibly very, very expensive. But get exposure to the housing market. It's going to continue to explode. The conditions right now in the housing market, I've never seen this good in my 25-year career, ever. Low supply, people want houses, they can't buy. Every house in my neighborhood goes up for sale. It's like, you better bid on it and bid the ask, or you're done. It's gone the next day. I'm seeing that. I'm hearing that from so many different places. There's a reason why you've seen so many more real estate agents out there. I probably have like 10 friends that are real estate agents now, and I live in kind of a small town. But let me know. If you're a real estate agent, let me hear from you. I haven't heard one person tell me that the market's not doing great right now. Maybe I'm wrong, but there's no bias to this podcast, guys. Whatever I hear from you, I've asked people all across the country, all across the world. This goes global. I love you guys. So many people email me from outside the U.S., overseas. It's awesome. But my job is to report back, right? This is a network. This is how we make money together. By emailing me, frankcurzioresearch.com, it gives real-time access to what's going on because a lot of these numbers are always delayed by 3 months. Look at the housing data is from May. New home sales, great number that came out. That's May. What do you think is going to happen in June? Because the economy get weaker? Yes. I mean, we're looking at Wednesday, the market's down 700 right now, but we have a Fed that said, hey, we're going to continue to print money. We're not even worried about the balance sheet. Who knows how long they'll extend unemployment benefits for? We'll see. But buying an asset, buying a home, never been better. I've never seen better conditions right now to buy a home than right now. And if you can't afford to buy a home, that's cool. Find a couple of home builders, do your research on them. Even if you want to buy an ETF, which, again, I don't, if you're going to buy an ETF, you don't need me because I like to buy which one of those stocks, which ones in those areas are going to do the best. But start doing your research, get exposure to that. In the other sector, it's interesting because what we're seeing in the market where we have record amount of cash on the sidelines, a lot of people didn't know that, record amount of cash, more cash on the sidelines in money market accounts than any time in history. Or since, I think it's 1992, since they started keeping track of this, which is basically in history. And when you look at the money flows, what do we see in the market when it came up? We saw technology lead the way, made sense, coronavirus, people staying from home. Zooms that did well, software companies that did well, Microsoft did well. This company's still generating revenue. Amazon's stores are allowed to stay open and everybody else was closed. That's pretty cool if you run one of those companies. You can stay open, but nobody else can. It's great. They did well. And then what do we see? We started seeing a rotation into super depressed value names like cruise lines, casinos, airlines, right? They surged. And we saw that. We saw money being pulled out of tech. So it's not a ton of more money coming into this market. It's a rotation of capital. So what you want to do is find where the next rotation is going to be. One of the laggers, the biggest laggers, was real estate. Now you're seeing a lot of money get pumped into real estate. Oil as well. Look at those oil stocks where they came off their lows. They're tremendously off their lows. They're still well off their highs, but these things crashed by like 70%. And Devon was 40, went to 5? To show where it is, double digits again. A lot of these names are up 100% from their lows, but they've come back. You've got to see a rotation to capital. And for those of you who think you missed a boat on airline surging or rental cars, cruise lines, casinos, one sector that has seen tons of outflow. The biggest outflows, the longest outflows in terms of weeks. I think it was 7 straight weeks of outflows. Has been infrastructure. Infrastructure companies. Horrible, right? Businesses stop. These companies have a lot of debt. Been a horrible industry to invest in. But it's interesting because last week was the first week that I saw rotation of capital. Thanks, Bank of America. I receive all these reports. The first time that we've seen in pretty much 2 months, money flowing into infrastructure companies, individual names. Now, these names are cheap. Some of these names have a lot of debt. So what I want you to do is look at their debt schedule, see when that debt's due, because the smart management team has pushed out their debt. So if you see a company that has $100 million in cash and $1 billion in debt, if they have not generating a lot of cash flow right now and they have $400 billion in debt due over the next 2 years, that's not a company you want to buy. But if they have like $20-30 million debt due the next 3-4 years, so no maturity, no real maturities, you don't have to worry about that. Because now projects are coming back online. They left their equipment at these sites and said, okay, well, halted right now, coronavirus. Now they're getting a call and saying, okay, continue. So we're not buying a value industry without any catalyst, which I never suggest you do ever. Don't buy a value stock just based on value because you're going to get smoked. Buy a company at 20 that went down from 50 and say, well, it's a good value right now, and there's no catalyst or no growth catalyst, it's going to go to 10. Trust me, I'm speaking of experience. I've made that mistake plenty of times. But now you have business coming back online. Some of these companies have restructured their debt. And now you have an infrastructure bill, which both parties are talking about, which is likely going to get passed over the next couple months. And these are so depressed, these names, that all you need for them to do is go from bad to less bad, and they're going to pop 25-30% in like a month or two. So if you're a Curzio Venture Opportunity subscriber, I just came out my newsletter today. New recommendation, the 1 point whatever billion-dollar company. I'm saying whatever because I don't want you to dial in and see what company I'm recommending. It's in the infrastructure space. It's a small cap that's gotten crushed. Amazing balance sheet. They're going to see earnings explode because all the cost cuts they're doing to set up for that infrastructure plan, and they have a great backlog of business, which has been halted due to coronavirus, but now you're seeing all this stuff come back online. That's the next sector where you're going to see rotation coming in. You're starting to see it now. What you want to do is get in ahead of that big rotation. For me, I made the mistake recommending Delta in Curzio Research Advisory. And I got so many negative emails. I said, look, airlines are going to explode higher. It's ridiculous. Everyone told me I was crazy. We wind up stopping out because I was a little early. And then Delta exploded higher. I do that every single time and stop out. My job is to protect you on the risk side. If you listen to my webinar, I also recommended Southwest. You're doing fantastic on. And a lot of those names exploded higher. But this time, looking at the flows and seeing what I did wrong and seeing the flows finally start to turn into this sector, where you're going to see a lot of hedge fund money getting in here, a lot of institutional money flowing in here. Get ahead of this. Because if I'm wrong, you're not going to see these things fall a lot from where they are now. They haven't really participated in a rally higher. They're still down tremendously off their highs. So even if you're wrong, you take a little bit of a loss. But if you're right, you're going to see an easy double, maybe a triple. That's how depressed these names are in this sector. And you have a lot of growth catalysts. And you have a lot of value in this sector. And nobody's really talking about infrastructure right now. That's why I love it. People are starting to talk about home builders. I'm seeing promotions all over the place in the newsletter industry, but still very early in the party. Definitely get exposure to the housing industry and start to get exposure to the infrastructure industry. So if you're a CVO subscriber, Curzio Venture Opportunity, you're going to get a great pick today. I do a fantastic video explaining exactly why I came to this decision. So if you're a subscriber now to my newsletters, guys, this is video newsletters that are like 25 minutes long. It seems long. I break down the markets, but I show you exactly what I'm looking at through my research engines, which cost a lot of money, of how I'm picking these stocks. So you learn from the research that I'm doing, which is awesome. Getting fantastic feedback. And for people who are like, Frank, I don't want to see your ugly face on a video, we also have a PDF of the recommendation. You just got to click that and read it. That's about 3% of our audience. The CVO members, that pick is now available by the time you're listening to this. And be sure to get in. It's a name that I really like. So, long podcast today. Thank you to Daniel. Big rant. I know I'm going to get some cool feedback from that. FrankCurzioResearch.com. But guys, feel free. Other outlets, if you want to see me more, or you could tweet me at Frank Curzio through Twitter. Our Curzio Research YouTube page is starting to explode now, getting a lot of people doing more video formats. I do live videos a couple times a week, just quick clips, 3 minutes or so. Well, I'll just tell you things that I'm seeing. And again, it's 100% live. It's fun. I don't care, make a mistake or whatever. But it's the technology we have is where I could share my screen and show you everything I'm doing. It's really a lot of fun. So be sure to go there. Subscribe to the YouTube page. It's really, really cool stuff. And you're going to see all of our podcasts probably starting next month, trying to get everything ready, that you're going to see all our podcasts go on YouTube, and you're going to see video versions, including video versions of the people that I'm interviewing, which is going to be a lot of fun. So questions, comments, get them here for you, frankcurzioresearch.com. Thanks so much for listening. Really appreciate all your support. I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.